everything that we can to cover everything tonight. So really excited to have you guys. I hope you can see the screen. Any issues, just let us know. So my name is Thomas Feng, and today we're going to be talking about where is the real estate market nationally and in the Bay Area, and also where is the economy. All right. So as a potential home buyer, are you guys feeling any of these emotions? Okay. Do you feel stressed? Do you feel concerned about the market? Do you feel uncertain? Do you feel anxious? Now, I'm sure you guys feel some of these emotions, and I hope at the end of today's presentation, instead of feeling all four, you're going to feel only two, and you'll see why. All right, so today we're going to cover some things, all right? First of all is cycles. Why are we talking about cycles? Are we washing machines? We're not. But you're going to see how real estate works on a cycle. And second of all, we're going to talk about stats. And there's going to be a lot of stats to talk about. Next, we'll also talk about us, our team, what makes us cool, what makes us different. And then we're going to talk about why buy, because until you know why you might want to buy, you're not going to buy, right? You got to see, why should I buy? Why is the economy telling me to buy? Why is the housing market telling me to buy? After that, we're going to talk some numbers, okay? Numbers and commas, that's what makes this all work. And our lender DAT with Help You Lend is going to cover a lot of lending topics. After the numbers, we're going to get going, right? That's when we're going to do the exciting stuff. We're going to start seeing homes. And that's where the fun starts. Lastly, we're also going to cover mistakes 5 and 6 and how to avoid mistakes 5 and 6. And also, what are the other mistakes? So first off, we want to offer something to you guys other than education. We're going to be offering a buyer-specific closing cost credit. It's going to be about $3,000 to $5,000, and we'll explain how to earn that credit towards your closing costs. All right, so someone said this: real estate provides the highest returns, the greatest values, and the lowest risks. So is this true? And if it is true, is it true in the Bay Area? Let's take a look. So there are 4 real estate cycles. Phase 1 always starts at the end of phase 4. And I believe right now in our market, we are in phase 4. Everyone's going to have to make their own decision on that. But right now, I believe we are in phase 4 based on what we're seeing in the market. Now, depending how long have you guys been in the Bay Area, this might affect your judgment. But phase 1 was after 2008, after the crash. All right. So we started seeing things change 2010 to 2013. I wouldn't say the real estate market was crazy, but that's when things started to recover, okay? So we started coming up 2010, 2013. Phase 2 was 2010 to 2018. 2013 to 2018. That's when things really started moving up, okay? And during 2018 to 2019, we actually had a little bit of a plateau. Home prices didn't go up. They also didn't go down. And then phase 3 was 2020 to 2022. We had a ton of homes on the market. Everyone was buying. Interest rates were low. The market was going nuts. I'm sure everyone kind of felt that. And then something changed and we came into phase 4. So we're going to go over all those things. Now, home prices naturally over time, they go up. And this is naturally since we started tracking these around 1960. They go up. Now, there's always going to be ups and downs, sometimes bigger ups, sometimes bigger downs, but it tracks up. So notice the slope of the line here, how aggressive that is. We're going to talk about why it was so aggressive. And these gray bars that you're seeing, these were past recessions. So 2008 and also COVID here as well. Next, this is interest rates nationally over time since we tracked it in 1960. And this data is from Fred, in case you want to do your own research, FRED. So you'll see that interest rates have actually never been under 5% until 2008. And that interest rate was needed to be so low to stimulate the economy. Now, this is when rates were around 18%. You might be hearing it on the news now. A lot of people compare this to like maybe when our parents bought and they're saying, what's the big deal? They bought with 18%. We're at 8%. How can you even complain? People never bring up the fact that home prices are now at least 4 times higher than that. So yeah, they were buying, but home prices now are insane compared to that. Now, we do want to remember this time because we're going to reference it later. So we also want to talk about where rates can go. So we want to keep in mind that if rates do come down, they're only going to come down to 5%. It's probably never going to go under 5% unless we have something like '08, which we're not going to with all the new lending restrictions. And what that also means is if the market comes down to 6%, maybe it doesn't make sense to wait for 5, right? Because it's not going lower than 5. So 6 could be a good rate. It just depends on where the market is. So now we're going to go through a lot of stats, and these are just economy where we're at right now. So last week, the Fed did not raise interest rates, and the first step to cutting rates is doing nothing with the rates. So how is the U.S. economy doing? Well, U.S. economy in the third quarter was at 5%, which is very strong. And GDP measures the monetary value of final goods and services. So this is the services sector, and the service sector is very strong. We have the service and the goods sector. Service is doing really well. Anytime you're above 50, it means you're expanding. You're getting new orders. You're building your business. And why is services so strong, especially after COVID, right? Because during COVID, everybody wanted to go out. Everyone wanted to see their friends, see doctors. But we couldn't go out. We couldn't even go out to eat. We couldn't go out on vacation. Pent-up demand is driving the services economy, and the service economy is huge. This talks about employment change. Employment is still very strong right now. Companies are still hiring at a very strong rate. In September this year, we saw 336,000 jobs added. Now, a strong labor market is great, but it also goes against what the Fed wants to see. The strong labor market is a source of inflation. Now, adding jobs, it does produce more for the economy, but it's also why interest rates are high. So the labor market is still strong, but we do forecast a little more unemployment. Now, anything under 4% unemployment is super good. It's super rare, and it means it's a very tight labor market. Now, last Friday, we got the new unemployment numbers, and you see they've gone up, and this is throughout the year. Okay, so we've gone from 3.4 to 3.9, still under 4%, still very strong. Now, this is real income growth supporting spending. So this red line that you're seeing, that is inflation-adjusted income growth. And it went very negative. What that means is inflation is rising faster than income is growing. And that is not good for an economy based on consumer spending. Inflation is rising faster than people's income. And because of that, you think they would spend less. But it's actually not true. The blue line is consumer spending. And yes, it has gone down, but it's never gone negative. And that's why the economy is still expanding and growing, even after 2 years of inflation. So how did this happen? The reason it hasn't gone down is because of these purple bars behind. The purple bars represent savings rate. So during COVID, people didn't spend a lot. And also think about all the fiscal stimulus that was given out, things like that, plus the organic buildup of just not going out. So the stockpile of savings is really fueling the consumer spending, even though inflation is outpacing income growth. You'd expect the consumer spending to retract, but it hasn't. Now, the red line has actually crossed over into the positive. And what this means is positive real income growth. Inflation has come down and income has not changed. So this is very good. This is a consumer price index. This is what the Fed looks at. And you see, we brought inflation from 9% down to 4%, which is huge, especially without seeing any decline in economic activity. But the Fed is shooting for 2%. 4% is not good enough. Getting from 4 to 2 is actually a lot harder from getting from 9 to 4. And a big part of why inflation is still up is because of these gray bars. This is the cost of services. So why did inflation start in the first place, in the pandemic? Well, I don't know if you guys remember, I do. Everyone was staying home. You couldn't go out and spend money, but what could you do? You bought a ton of stuff on Amazon. You bought a ton of stuff online. And that's where all the monies went. It went to goods. So people spent so much money that we clogged up the global supply chain, and goods prices went up as well. So we no longer have the long line of ships waiting at the docks. Supply chains are back to normal. And because of that, because of this big pull down, that's a big reason why inflation has dropped from 9 to 4%. This is the core PCE deflator. This is what the Fed cares about. This is what they look at. And we forecast to come down to 2% by 2024. This is good because it will eventually lead to the Fed cutting rates, which will lead to lower mortgage rates. So now again, I want to go back to this. This 18% time, it's because the Fed screwed up. What happened was inflation was high and they fought it. They brought it down. But instead of fighting it all the way down to 2%, they let it go because of public pressure. No one wants these fiscal locks. So they let it go and it jumped back up again. That's why right now the Fed is so aggressive. They want to make sure they get inflation down for good. We also see that when the Fed decides to cut rates, they cut it very fast. The slope of this drop, the slope of this drop, the slope of this drop. Whereas when they raise rates, they raise it very slowly. So when rates do come down, you're going to notice that it's very quick. One part of the residential market that has actually gone up is new home sales. So resale homes are down by 25%, which are normal homes you see on the market. But new construction is actually up 30% this year. The reason is builders, unlike existing homeowners, they're a lot quicker to reduce their home prices. They're just going to get it done. Versus someone selling their home down the street, they might not drop the price down for like a month. New home builders, they're also buying down interest rates to 5 to 6%. But this does show you that once rates come down, this is going to happen in the resale market as well. It's just rate dependent. So this last chart shows why we're really bullish on housing, why it's going to go up. And maybe not with the 8% rates right now, but in the next 5 years, we're looking at a population increase that we haven't seen since the baby boomer generation. So the Fed will eventually cut rates. And when they do, we're looking at all this pent up demand. The amount of young people, 25 to 35 years old, we haven't seen that amount of population, even in the baby boomer age. And these people, they all have good jobs, just like yourselves. They're having families, babies, and they're looking to buy the home. They'll take the higher rates if it is what it is, right? They'll refinance. They're more willing to accept the higher rates because they don't have a home yet. So what are the benefits of a higher interest rate market? You might tell me, Thomas, you're crazy. What kind of benefits would there be? Well, it's going to allow you to get into a home easier. So it's going to be less competitive. Right now, we're seeing 0 to 5 offers compared to 20 to 30 offers 2 years ago. I don't care how good your offer is. 1 out of 30 is not easy, and I like to gamble. You don't need to have 20% down. When people hear 20% down, they have no idea how much 20% down is, right? Let's take $1 million. That's $200,000. Do you have $200,000? And if you do, is it cash or is it tied into stocks that you might not want to sell, right? Right now, you could get in with 5% down, 10% down, 15% down. You can also keep all your contingencies. You're going to feel a lot safer when you make these offers. You can also get a seller credit to buy down your interest rate or closing costs. Sales prices we're seeing at list price or even sometimes below. And you can also get in with the FHLA loan or VA loan. You were always able to do that. But unfortunately, when there's a lot of offers on the table, they just don't really look at those loans. It sucks, but it's reality. And you could get into a home now to prepare for that next home when maybe rates drop down. So we did just look a lot at national data. This is local data for Santa Clara and Alameda County. The first part of the graph is last year. This is this year. So if you see this, the red bars is inventory, and you see inventory has come down by a lot. But in terms of buyer sales, we're not that far behind last year when rates were 3%. In these hot months, maybe more, but we're pretty close. In terms of sales price, other than these couple of hot months, we're pretty much at the same price, which is crazy. We see it mirrored in Alameda in terms of sales. Alameda prices probably dropped down a little bit more, but still tracking very strong. So that's pretty much all the stats we have for you today. I want to share a little bit about myself and our team. So we work and sell in Silicon Valley, the Peninsula, and East Bay. Michael on my team, he's won a couple of awards as well. San Jose Mayor Award for Community Services, leadership role in his neighborhood and HOA. So if you're looking at HOAs, he has great knowledge about those documents. We started selling real estate in 2007 before the crash. So we've been through the many ups and downs. We learned along the way, and we're going to pass that knowledge on to you guys. I am the president of ARIA. ARIA is the Asian Real Estate Association of America. We have 40,000 members and 45 chapters. That allows us to really stay in tune with the national market and national lending as well, just to give you an idea, because if prices are going crazy here, but nationally everything is in the dumps, you might not want to buy, right? It might not be a good idea. Michael on our team is also a CPA. If you ever have tax questions, he can help you through that. And we do have experience in residential and commercial real estate. So this is our team. This is Jessica, Jenny. Iris is also on our call today. We have Alessandra, Michael, and Anne. All right. So first up, we have Alessandra. And Alessandra, let's get it going.
Thank you, Thomas. That was great information. Hi, everyone. Let me start by telling you a little bit about myself. My name is Alessandra, and I grew up in the Peninsula, San Mateo area and made the move to San Jose 5 years ago. I would love to know where you guys are from. Chat down below.
Yeah, I know a lot of people can't talk. They're able to type.
Okay.
Yeah, don't worry. Maybe they'll put it in later. Keep going.
Well, I also had the opportunity to work in the Tri-Valley region for a year. This area is made up of the Amador, San Ramon, and Livermore area. As a proud mother of two wonderful boys, this time I spend with them is my greatest joy. Education and school holds a special place in our hearts as parents. So I've dedicated the time to research about schools. When we work together, I can offer valuable guidance about schools. Who here has little ones? Or well, they can't chat, right? Or
yeah, and I think like AJ mentioned, he has kids in the other room or something like that as well.
Well, that's amazing to see that some of you guys do.
Okay. Seraphin said she just moved from Riverside County, actually.
Oh,
Welcome
nice.
to the Bay Area.
Yeah. Okay.
Well, in addition, I'm fortunate to have an amazing husband who supports and fulfills my life. This is balance between my personal and professional world that fuels my passion to commitment in helping my clients achieve their real estate goals. Can you change to the next slide, please, Thomas?
Yes.
Okay, our services stand out of several compelling reasons. With a track record that predates the 2008 financial crisis, we are able to help you discuss the pros and cons of each, ensuring you make a sound real estate decision. Also, our team has an in-house CPA, adding a financial perspective that enhances your investments. We also embrace diversity with multilingual team, like skilled in Mandarin, Cantonese, Vietnamese, Tagalog, English, and Spanish, ensuring effective communication with many families. We believe that knowledge is power, and we always stay stay updated to provide you with the latest insights. As proud members of ARIA, we network with realtors across the nation, and we have a feel of where the national housing market and where the lending market is at. We also create videos such as quarterly market reports and talk about many real estate topics on our YouTube. This is another way we stay on top of the market. We stay We get many exclusive opportunities like off-market homes that we share with our buyers, and we're always checking out new construction homes. Can you change to the next slide, please, Thomas?
You got it.
Thank you. You know, when it comes to finding the right home, there's one name that stands out in the real estate market. Can you guys guess? That's right, Zillow. We're proud to be partners with Zillow. With Zillow, we have a world of real estate right at our fingertips, and it's more than just a website. It's a powerful tool for buyers and sellers. And it's not just us who love Zillow. We're earned over 68 plus 5-star reviews from satisfied buyers and sellers. Thanks to Zillow, we've helped many families find their dreams homes, and we're excited to do the same for you guys.
Thank you, Alessandra. Next up, we have Iris.
All right. Hey everyone. First, I want to thank everyone for joining us today. My name is Iris, and I'm thrilled to be here today. I've been selling real estate for over 2 years, and like many of you, I wear the proud hat of being a parent of 2 young children. So when it comes to finding the perfect home, I understand the importance of safety, commute, and good school. Even though my journey in real estate is relatively new, I bring a new perspective and dedication to ensuring your family needs are met. So I'm not just committed to helping you find a home. I'm dedicated to finding your family a true home in a great area. So before you decide to buy a home, a question you should ask yourself is, does it make sense for me and my family to buy it right now? Thomas, can you go to the next one? We'll be answering that question today throughout the Zoom. These are some of the reasons why it could be a good idea to buy instead of renting. I guess you guys already do some research. So first is to build equity, right? Rent prices are already increasing across the country. In addition, the Bay Area is such a desired place to live. Even with the interest rates and prices are going up, people are still buying and selling. So let's say you buy a home for $1 million. Are you ever going to pay $1 million? You are never going to pay $1 million unless you live there for 30 years, because you will eventually sell it and get your money back. So what does that mean in reality? Let's say you buy a $1 million home and you live there for 10 years. And let's say in 10 years, when you sell it, it does not appreciate at all. How crazy is that in the Bay Area? Then that means you got to live in a $1 million home for 10 years for free, because that money go back into your pockets. We're speaking in very general terms, by the way, of course, because we didn't count property taxes, home insurance, or other costs into owning a home. So now, even if that home does not appreciate at all, you still come out ahead. Why? Because of equity. Once you purchase a home and put in a down payment, for example, about $100,000, and you make a mortgage payment for 5 years, maybe you walk away with $300,000 plus any appreciation and more saving. Now you put that $300,000 and buy another home, and maybe you have to do that one more time to get the home of your dreams. So that's the reality in Bay Area. If the home does appreciate, you also get $500,000 tax-free a couple. So if you're thinking about buying, this is a good idea to talk to an experienced lender to go over the pros and cons of your specific situation. We'll go over that. What kind of mortgage should you get? Should you pay cash? Should you get a mortgage? And so these are some of the reasons why it could be a good idea to buy instead of renting. Buying a home means that your monthly mortgage payments contribute to building equity, helping you invest in your future. However, it needs an initial financial commitment in the form of a down payment and closing cost. good news is in this market, you can get away with putting down 5 to up to 20 compared to the last 2 years, you would need 20%, just like Thomas mentioned earlier. We've also been helping buyers get in with a seller credit in this new market that can cover your closing cost. Actually, last month, I helped one of my buyers get in with 20,000 seller credit to buy down her interest rates and brought her monthly mortgage down to 1,000 lower. But on the flip side, buying provides stability, allowing you to personalize your space to your needs and wants. So most realtor won't tell you this, but there's a plus side to renting, is mobility. If you are new to the area and not sure if you are planning to stay long-term, renting could make sense. So once you decide to stay in the area, buying could be a better decision. On the other hand, renting involves an entire rent payment going to the property owner, similar to buying, require an upfront financial commitment, including security deposit, initial rent payment, and renting offer flexibility, making it easier to move when needed, but it limits your ability to make improvement unless the property owner permits them. So, last year I have a friend, she found a charming home, she loved the place, it's a great location, but she faced constant rent increase without any fixes or improvement from the landlord. So, it sucked, right? So everyone, as a first-time home buyers, there are plenty of online websites to help you find your first home, like Alessandra mentioned, a website like Zillow, make it easy to find home that's out for sale. There are also list time that open house at help. So all you need to do is show up to take a look around. So why bother working with a real estate agent? Keep in mind that the seller is almost always represented by a realtor. Having your interests represented by a realtor on your side will ensure that your interests are represented, and that's a professional in the field will negotiate the best deal on your behalf. And also, buyer, you guys don't have to pay realtor, and it's the seller that pay the realtor. So why not, right? When working with a realtor, we will let you know the pros and cons of each home in terms of school, location, work to be done to the home, going over documents and inspection, and helping you see all the potential pitfalls. Well-connected realtor have access to property that not yet on the market, which we call off-market home, like Alessandra mentioned earlier, and coming soon home, so you don't have to compete with other buyers in the neighborhood with low inventory levels like Bay Areas. It is all about relationship and connection. Off-market home are homes that seller may not want to go on the market because some reason like divorce or maybe the home in the bad condition. So coming soon listing are listing that we have that are not on the market yet, but will be on the market soon. So now we're switching to that is going to talk about the lending side. Thomas.
Thank you, Iris. Go ahead, Dat.
Thanks everybody for showing up. My name is Dat No. I'm a senior loan officer here at Help You Lend. We are a wholesale brokerage here in San Jose, and we take great pride in being very knowledgeable, client-centric, and just providing the best solution to our borrowers. So Help You Lend, we're basically a lending simplified company. We help consumer get their lending because you deserve the best mortgage rate and advice out there. There are no lending solutions. There are lending solutions for everyone. Okay, So as I mentioned, we are a wholesale lender. We have about 25 plus different lenders. Some of the one on the list that you're probably going to recognize would be Rocket Mortgage or Quicken Loans, JMac Lending, and Spring EQ. So let's go over the lending journey. What we need before we can actually send you guys out to Iris or Thomas or Alejandra. So the first thing would be, of course, to get pre-approved, right? Without that pre-approval, you're not going to be able to really go out there, and a realtor is going to take you very seriously because you wouldn't know what it is that you're qualified for, let alone what a realtor can show you, right? They're not going to show you something that is 1.5 if you can only qualify for $1 million, right? Or on the other way is you go and you get qualified for $1 million, but in actuality, you can qualify for a $2 million home. So that's the first step. Next would be, of course, once we get you pre-approved, we're going to send you back out there, like I said, to talk to Thomas, Iris, Alejandra, get you into the home of your dreams, get you into that contract because they're great at it. And once you get that contract, of course, the next step would be to get a loan approval. You come back to me. You come back to my team. We'll work with you to get you that loan approval with the underwriters. And once that is there, we'll go ahead, and the next step, which is one of the better steps, would be a clear to close, right? That is when all the conditions, that is when we remove everything, including the contingencies, which are usually what prevent a seller or a buyer from doing anything else, right? That's what Thomas was talking about earlier, about how now in this market, you can come in being a little bit safer by keeping your contingencies. And finally, the last step, which is the best step of this journey, is when your loan closes, you go on record, Thomas and his team meet you up and give you guys that key. Okay. So Thomas earlier, he mentioned many different mistakes that a first-time home buyer can make. One of them is not knowing your loan products and ignoring different incentive out there. One of which would be ignoring first-time home buyer programs, right? So one such would be the Empower SCC. SCC stands for Santa Clara. This is a down payment assistance program that is offered for residents of Santa Clara or borrowers who work in Santa Clara County. It allows a borrower to access and borrow up to 30% of the purchase price or $250,000. There are no monthly payments. Everything gets deferred. And again, you must live or work here in Santa Clara. And one of the things that they do require, just so you can have some skin in the game, would be to put about 3% down of your own money. The rest you can borrow, the rest you can get from this program. Okay. Mistake number 2, again, part of the lending journey is not getting pre-approved. You wouldn't know what you're going to be able to qualify for. You wouldn't know, what it is that you can go purchase, right? So make sure to go and get that pre-approval, because that is the ultimate first step, just so everybody's on the same page, just so everybody knows what they're getting themselves into. Okay, so the basic document, if we want to get pre-approved, what are the basic documents that we need? Well, we always going to need a form of government ID. And most of the time, that's going to be your, whoa. I don't know what's
Super
going
fast, Dad.
on. And I'm not even clicking anything.
I don't know what's happening, but I got you.
All right. So again, just the documents would be the government ID, 2 years of your tax returns. If you're a W-2 employee, of course, they want 2 years of your W-2s, 2 pay stubs, or basically totaling up to about 30 days. Your assets, they want 60 days of your assets. So whether that is from your checking account, savings, 401k, they just want to make sure that you have the money to buy the home and to put towards the down payment. All right, so these are the different type of assets or areas where you can get your money from, right? 401k or your retirement account. Everybody works, so they should have that. Gifts. We can go and get a gift from our parents or relative. If you have one of those rich aunts and uncle that can give you some money, now is the time to ask, right? Stocks, bonds, loans, getting a HELOC from, if you have a current home right now, holding money from it, getting the equity out to go and buy another one, right? Undocumented cash, those are probably not going to work just because everything needs to be sourced. Everything needs to be documented, because after 9/11, they don't want any money laundering, which I'm pretty sure everybody on this Zoom is not laundering here, right? So the biggest question, what is it that I can afford versus what it is that I'm comfortable making, right? We need to know the difference between that, because again, when we pre-approve you, we're going to pre-approve you to the maximum qualification as to what it is that you can purchase. It doesn't mean that you have to go and use the full pre-approval or the full purchasing power, but it's good to have. Now, just because we can get you, let's say, up to 1.5, it doesn't mean you're comfortable making that monthly payment, right? With the current interest rate, probably something at 1.5 purchase price, 20% down, your principal and interest payment is probably going to be north of 10 grand. Are you comfortable making that payment even though you can afford that payment? Okay. So when we do that, it just comes down to, again, your comfortability level. Forget what you can afford, but make sure you're comfortable with what it is that you're making every single month. Because right now, you're going to be, once you purchase this home, you're going to be locked in for 30 years. That's 360 payments. Can we get there? Okay. And so again, budget very well, because it's going to come back down to your comfortability and then what it is that you're willing to pay. Okay. So understanding your credit, right? We all know about our credit. We hear about our credit score, FICO score, going on to our banks. They all have the banking apps with credit monitoring, Credit Karma. But what is it? What do I need in order for me to purchase a home, right? Well, the higher your score, the better off you will be. And a high score is anything that is 760 and above. Okay, once you get there, you can qualify for most of the products that are out there, something that I'll go over later on. But you just want to make sure that you don't want to have any lates. You don't want to have any derogatory items, right? So that way you can keep your score high. If your score ends up being lower, we'll go ahead and we'll talk about that later as well. Okay, so how do we get the high credit score? Well, one of the things that we can control is how much credit card and how much we swipe on that credit card. We can have a $50,000 line, but we use up all $50,000, we're not going to be at a 700 score, even if we don't have any late. You want to go and do 10% or less utilization. Okay, so the different type of loan programs that I mentioned to you earlier, conventional loan, government loans, which are the FHA and the VA loans that Thomas mentioned earlier, the down payment assistance program, and the non-QM, which are basically bank statements, or DSCR, which is debt service coverage ratio. Okay. So we'll go into FHA a little bit more just because it allows us to qualify with a lower credit score, as low as 500, with the ability of coming in with less for a down payment. You can come in as low as 3.5%. At 3.5%, you're going to have a lower mortgage insurance premium, and you can get a higher DTI for qualification. Okay, so mistake number 3, speaking only to the banks. Everybody here bank with US Bank, Wells Fargo, or anything like that. But by going to a major bank, they're not going to take care of you like you think they would, right? Because most of the banks out there, most of the loan officers there prefer to work with a bigger loan amount versus someone like me who is okay with any loan amount, right? And so when you go there, you have higher fees, higher costs of doing business with them, although they quote unquote were supposed to take care of you. Okay. So when searching for a home, please go reach out to, again, Thomas, Iris, Alejandra, the expert here who will show you what it is that you need to get into your dream home. The different type of home that you're going to get: single family, condo, townhome, or planned urban development, or if you would like, live in one, rent out the other, multi-units. Okay, loan approval, we'll go into that a little bit more, is once you get into contract, we'll go ahead, we'll submit in your contract to our lender of choice after we shop for that best rate for you and get you that loan approval. Okay, so in order for us to get there, of course, we have to lock in a rate. What impacts our rate? The down payment, what we're going to be putting down, how big of a loan amount are we getting, the different type of property type, the 4 that I just mentioned, you know, whether we're going to be living here as a primary or investment, whether we're doing a 15-year or a 30-year fix, how high our credit score would be, and the different type of loan program. Okay, once we get all of that, we're going to get to a place where it's called clear to close again, which is being able to just remove all of our contingency so we can get to the signing table. Okay, then of course, you get your keys. It's a happy day. We get to go celebrate and enjoy a new chapter of your life. Okay, so Help You Land, why us? We're solution-based. We have wholesale rate. We shop for you. We work very fast and give you a turnaround of about 24 hours. Our management team, which is Eric and Jason, they have over 50 years of experience, and the whole team will always be there and put you first. Okay. And finally, how to start the process, reach out to me, and we'll be able to just start a consultation and start working with you one-on-one.
Thank you, Dad.
Thank you.
Iris, let's have you jump in again.
All right. Thank you, Dad, for sharing about all the loan information and buying process. So after getting pre-approved, we come to the exciting part. We'll start seeing home. When working with a realtor, I keep you informed about all the new properties that align with your home buying criteria. I will arrange private showing to any property that you like, whether it's new construction coming soon or any off-market listing. Our team is dedicated to accommodating your schedule. We are available after work hours and weekend as well. So if I'm not available to show you the home for some reason, someone on our team will also show you the home as well. I'm also here to discuss about neighborhood. Like I said, I have kids, so neighborhood safety, school is really important. And if you have any other question and concern, we can discuss that as well. So once we find the home that we like, can you move to the next one?
Mm-hmm.
So when we find the home that we like, we'll go over the most effective approach to create an offer that safeguards your interest, such as we'll explore the financial terms to ensure that they align with your budget and goals. We also discuss interest rates and how they impact your long-term financial commitment. We'll also analyze the overall cost to close a deal, making sure that it's manageable for you. We'll also establish the possession date that work with your timeline and needs. We'll also review inspection and to uncover any potential issue that might affect your decision. So if necessary, we evaluate repair to extent of any required fixes. We also cover contingency in place to provide you with peace of mind throughout the process. Once we enter into contract, my commitment to your success doesn't just stop there. I'll maintain ongoing communication with all involved parties to ensure a smooth and timely closing process. And here's how I make it happen. I'll stay in contact with the lender, the seller, and buyers on a weekly basis, leaving no room for delay and ensuring we met our closing date as planned. I also meet with the appraiser with a list of updates and comparable to help secure the highest possible property valuation. I'll connect you with a reputable vendor and partner who can assist with any necessary renovation or fix it, making the process hassle-free. I'll schedule signing all party involved, streamlining the final step, and I'm here to make your real estate experience as seamless and successful one.
Thank you, Iris.
Of course.
Cool. So, we covered a lot of stats. We covered our team. We covered the home buying process. We covered the lending process, and the lending process is honestly the most important one. So we're really happy to have Dat here with his team experience, getting pre-approved, figuring out the numbers. So mistake number 4 is actually buying directly from a builder. So here's a couple things about buying from a builder. Closing cost assistance can be bait for a higher interest rate. So when you go to builders, they might give you some kind of closing cost assistance. They might give you design options. They might give you credits towards design, other incentives, but it could actually cost you more in the long run. It might be better to take none of that and just do these updates yourself. It might be actually cheaper. So that's how we consult our clients. A realtor, we represent your best interest, just like the sales agent working for the builder, they represent them as well. You need your own representation. Third, a realtor can help you make the best decisions financially as you build. You're not going to know this right now, but when we write an offer on a regular home, the contract is about 10 pages long. When we write an offer on a new construction home, it's more than 100 pages long. And the reason is that builders are looking to protect themselves and making sure they get paid regardless of how you back out. And it's not because they're being mean, it's because builders have inventory. They can't just let you back out. They just got a ton of homes they got to get rid of. Versus a normal seller, if you back out, yeah, it sucks, but they could find another buyer, right? So the builder contract is written to be able to screw you out of your deposit. And sometimes we can't protect ourselves from that. Sometimes it's just written the way it is, but we want to know how it's written up. We want to know how they can get our money. And that's what we do. We're going to go over that entire contract with you. And we're also knowledgeable about what to look for during inspections and final walkthroughs. So the final walkthrough we're always going to be able to do, but depending on the home and which part of the process it's in, it's not always possible to do inspections. But again, we just want to know what we're walking into sometimes in terms of the contract. Many buyers go straight to the builder. It's because they think they can get a better deal without bringing a realtor. And it's actually the opposite. Why? Why do builders give us, the realtors, a better deal? It's because we represent many transactions. I could bring a builder 10 deals versus you going into the builder, you're just one deal, right? So they're more inclined to help me out, and I'm going to help you out as our client. Next mistake is skipping the home inspection. I don't know why you would do this, but we've seen it happen. So for a regular home, single family home, you're going to have 3 inspections: property, pest, and roof. Based on the property inspection, you might have a pool, a chimney, or a foundation inspection. And again, the inspections are just letting you know what you're walking into. A home could be damaged by $1 million. It could still be the right home if it's the right home for you, but we just want to know what we're walking into. So we want to know about red flags. We want to make sure we have this contingency so we have negotiating power, figuring out structural issues, permit issues, and just knowing what things cost. Mistake number 6 is skipping the review of condo documents. So anytime you purchase a home in an HOA, you're going to have these type of documents. And there are a lot of documents. The important ones to go over are the financials. Do they have reserves for all the fixes they plan on doing? You also want to look at the bylaws. The most important things that my buyers look at is, hey, do they allow pets? Can I have a barbecue on my patio or my deck? Am I able to rent out my property later? These are things you kind of want to know before you get into contract. Another important one is litigation. Is this HOA getting sued by maybe some insurance claim, by some kind of builder defect? You want to know about these things. All right, so, I'm sure most of the people we're speaking with are going to be first-time home buyers, but we also provide another service. It's called Co-Home. I was able to help our client, Jeffrey, who's based in Denver, looking to invest in Miami real estate, find desirable properties that fit his budget and also his lifestyle. Meaning, the homes he likes sometimes is over his budget, or the ones in his budget just weren't that nice. So by investing only an eighth of the price, we were able to help him do that. And we were able to help his group of friends do that. So we purchased a property in Miami. It's one of these developments, and full ownership cost is $800,000. Obviously, you get full use because you own the property, able to rent it. It's not managed. You got to manage it yourself. Of course, you get the equity, and you can sell it at market price. By using Co-Home, he was able to purchase an eighth. So you could buy an eighth, a half, a quarter. But with an eighth, he was able to get in with $100K. He's able to use the property 44 days because you obviously got to split it with the other investors. You can rent it out, and Co-Home actually helps with managing the property. You get the home equity, and you can also sell your share at market price. They've already gotten a 24% ROI in the first 7 months. So, maybe you're thinking about buying, but, rather invest, or you already have a place looking about investing. This could help diversify your portfolio. So we're kind of at the end of the presentation now. I hope we took away the stress, right? I hope we took away the stress by understanding the housing market, the economy, lending, and the home buying process. We also hope you feel more certain about your own ability to do this, of our ability to help you lend, my team, to help you throughout this process. After this presentation, we also hope that you're concerned. We hope that you're concerned that if you don't buy something and you keep on renting, it might not be the best choice. Anxiety, we're always going to deal with anxiety until you get that 200 to 300K of appreciation. You're going to deal with anxiety, so don't worry about that. That will always be there. So about our promotion that we spoke about, if you're interested in booking a time with us to speak this week, to figure out how we can help your real estate goals and to see if we're the right fit, that doesn't mean you have to buy a home this week. That doesn't mean you have to buy a home this year. You could buy in 5 years. We just want to talk to you this week, 30 minutes, see what you are looking for. If we help you purchase a home up to $1 million, we're able to provide $3,000 towards closing costs. Between $1 million and $2 million, $5,000 toward closing costs, and above $2 million, we can also discuss further as well. If you'd like to follow our social medias, this is our Facebook, our YouTube, and this is my Instagram, Iris, Alessandra, and also Dat. And that's pretty much it for the presentation. I want to leave this up to you guys now. If you have any questions, if you don't and you just want to leave right now, go for it. Feel free to turn off your mic or just type a message.
Very helpful stats. Those are kind of the key indicators for us as a buyers for the market. So really appreciate that. And
Thank
make
you,
it
Mom.
simple for us to understand.
Thank you, Katrina. Thanks for jumping on with us.
Thank you, Katrina. Hope to talk to you soon.
Thank you.
All right. Well, you guys have all of our information, text and email that we've been spamming you with. So if you have any questions, please hit us up. Do we specialize in San Francisco? Great question, Patricia. We've helped a couple clients in San Francisco. San Francisco, I would tell you, is interesting because a lot of the properties, they sometimes have unpermitted space. So it's really important to really go through those documents together. But yes, we do work in San Francisco. Great area. Seraphin, I'm a first-time home buyer, but my husband has not purchased a home in 20 years. Is he considered a first-time homeowner or not? That in terms of the loan, would he be?
So in terms of the loan, generally, yes. As long as he is not on title for the last 3 years, he would be considered a first-time home buyer. Okay.
And Seraphin, title means like, let's say his mom owns 5 properties and he's on title. He actually has part ownership. So, if he's not, but this is a great question to book a call about. We could go a little more in depth about your situation if you want.
Great question.
You're welcome, Seraphin. Okay, Trina, Seraphin, Patricia, thank you guys for joining us tonight. I'm sure you got other cool stuff to do. So we'll leave it at there for tonight, and we'll go from there. See you all soon.
Thanks, everyone.
Bye, guys. Good night.
Good night. Thank you.